Stick around because by the end of this video, you'll have a new lens through which to see your investing journey. And what are great returns on investments? Let's define our terms. We often measure our performance against the S&P 500, a benchmark for the US equities market. Over the long term, the S&P 500 trends to return about 8 to 10% per year on average. If your portfolio can consistently achieve returns above that, say 12, 15, or even 20% or more annually, you are doing extremely well. Such returns compounded over time dramatically increase your wealth compared to just passively following the index. Many of you are busy professionals, working long hours. Time is your most precious commodity, and analyzing multiple stocks deeply every single day might be impossible. The pain you face is feeling stuck in the rat race, stuck with mediocre returns, and stuck with the perception that you can't do better than the S&P 500 because you simply don't have the time or a massive bankroll. Small investments help alleviate this pain by offering a more flexible, lower pressure entry into the market. You're not forced to commit huge capital that keeps you awake at night. You can take a more exploratory approach. With this right research, you can find promising opportunities without needing to dedicate every free minute to this process. It gives you the freedom to learn, adapt, and grow your portfolio incrementally. The main benefit is the freedom to experiment and the possibility of compounding gains over time. Small investments allow you to build confidence gradually. When you start small, even if you make a mistake, the impact on your overall portfolio is minimized. Learn by doing. Over time, you refine your strategy by seeing that what works and what doesn't, all without risking huge sums. Potential outsized returns. When you do strike gold with a small investment, the returns can be proportionally huge, and you can scale up the approach in the future, cutting down the research time needed. Now you're thinking, great, I invest $1,000 and double it in a year. That's only $2,000. Big deal. It's easy to dismiss small gains because the absolute dollar amounts seem trivial. But remember, the key word here is growth. We're not just multiplying 1,000 by 2 and stopping. We're demonstrating a process. If you can achieve outsized returns with the small amounts, you can eventually apply the same approach to larger amounts as your confidence grows. Moreover, compounding works wonders. If you identify multiple opportunities like this over time, the cumulative effect can significantly move the needle. Even if you always invest relatively small amounts, outperforming the S&P 500 consistently for a decade can drastically change your financial landscape.